Ever wondered how businesses manage the transfer of materials between different locations using SAP MM? Let's dive into the fascinating world of stock transport orders, or STOs. This is a procurement document used to request the transfer of materials from one location to another. The beauty of this mechanism is that it can be used within the same company code or across different ones, making it a versatile tool for businesses. Picture this scenario. A company has multiple plants or storage locations, and they need to move materials between them. It could be an intercompany transfer between two different company codes, or an intra-company transfer within the same company code. This is where a stock transport order comes into play. It's the unsung hero behind the smooth movement of goods in a company, ensuring that materials are where they need to be, when they need to be there. Creating a stock transport order is akin to placing an internal order within the company. It specifies the sending and receiving locations, the materials that need to be moved, the quantities, and the delivery dates. It's like a well-coordinated dance routine where everything has to be in sync for a successful performance. But STOs are not just about moving materials around, they're also about maintaining control and visibility over the process. They allow for tracking the movement of goods, ensuring the accuracy of inventory levels, and even facilitating financial transactions in the case of intercompany transfers. Stock transport orders are a testament to the power of integrated business processes. They exemplify how different functions, procurement, inventory management, financial accounting, can come together to enable efficient and effective business operations. Now that we've understood what an STO is, let's delve into the process of creating and processing an STO. It's a journey that will take us through the creation of the order, the release of the order for further processing, the issue of goods at the sending plant, the receipt of goods at the receiving plant, and finally, the verification of invoices and payments if applicable. So, are you ready to explore this journey? Let's get started. Creating and processing an STO involves several key steps. Ready to walk through them? Let's start at the beginning, where all good journeys do, the creation of the STO. This is done using transaction code ME21N. Here you'll specify the sending and receiving locations, the materials to be transported, the quantities, and the delivery dates. It's like writing a shopping list for the other location. Once the STO is created, it's time for the release. This is the moment when you review the STO and give it the green light for further processing. Approval workflows might be in place, so this step is crucial to ensure everything is in order before the materials start their journey. Now, it's time for the goods issue at the sending plant. This is done using transaction codes VL02N or MIGO. It's here that the materials leave the sending plant's stock and enter a special kind of limbo, the stock in transit. This is a designated stock type for STOs, and it's important because it ensures the materials don't affect the inventory valuation until they reach their destination. Speaking of destinations, the next step is the goods receipt at the receiving plant. Again, this is done using transaction codes VL02N or MIGO. With this step, the receiving plant welcomes the materials into its stock. It's like the finish line of a race. The materials have reached their destination, and the receiving plant can now include them in its inventory valuation. But the STO process doesn't stop there. If applicable, the next step is invoice verification. This is done using transaction code MIRO. It's a bit like checking your receipt after shopping. You're making sure that everything you ordered has been delivered and that the prices are correct. Finally, if required, the last step is payment. This is where you settle any invoices associated with the STO. It's the final seal on the STO process, tying up any loose ends and making sure everyone is paid and happy. So to recap, the STO process involves creating the STO, releasing it, issuing the goods at the sending plant, receiving the goods at the receiving plant, verifying the invoice, and making payment if necessary. It's a multi-step process, but each step is important in ensuring the smooth and efficient transfer of materials from one location to another, and that's the STO process. But did you know STOs can differ based on company codes? Stay tuned to find out more. In SAP MM, we have two types of STOs, intra-company code STOs and intercompany code STOs. But what's the difference? Well, let's delve into that. An intra-company code STO, as the name suggests, involves the transfer of materials within the same company code. This means that the movement of materials is within the same legal entity, say from plant A to plant B within the same organization. On the other hand, an intercompany code STO involves transferring materials between different company codes within the same organization. This is a bit more complex, as it's like a transaction between two different legal entities, say from company A to company B, even though they are part of the same parent organization. Now you might be wondering, what's the impact of these differences? Well, it's all about the accounting entries. For an intracompany code STO, no accounting entries are generated as the transfer is within the same legal entity. It's like moving a book from one shelf to another in your home library. However, for an intercompany code STO, accounting entries are created to account for the transaction between the two company codes. This is essential for tracking and reporting purposes, as it's like selling a book from your library to your neighbor. Understanding the difference between these two types of STOs helps in seamless inventory management. But how does SAP MM ensure accurate inventory valuation? You might be wondering how STOs impact inventory valuation. Let's find out. In the world of SAP Materials Management, or SAP MM for short, inventory valuation is a crucial aspect. It is the process of determining the monetary value of a company's inventory at any given time. So, how does an STO or a stock transport order play into this? Well, it's all about timing. When an STO is initiated, materials are designated to be moved from one location to another. But here's the catch. They don't immediately impact the inventory valuation. Why? Because SAP MM uses what's called special stock types. These special stock types, such as stock in transit and stock in transfer, are used to earmark materials that are part of an STO. They distinguish these materials from regular inventory, ensuring that they're not included in the inventory valuation until they reach their destination plant. This clever system prevents any premature financial impact. After all, it wouldn't be fair to value inventory that isn't physically present at its designated location, would it? So in essence, SAP MM ensures that STOs don't affect inventory valuation until the goods are received at the destination plant. This is done by using these special stock types, allowing businesses to accurately track and value their inventory throughout the STO process. Now that we've covered inventory valuation, let's move on to delivery types in STOs. The delivery type field in an STO plays a crucial role, but what is it exactly? Well, it's a vital component in the stock transport order process that determines how the transfer of goods should be conducted. This field can specify whether the transfer should be based on a physical delivery, like shipping, or a stock transfer where no physical movement is involved. Imagine you're orchestrating a symphony. The delivery type field is your conductor's baton. It guides the flow of your materials, setting the tempo and rhythm of your stock's journey from one location to another. It helps determine whether delivery documents, such as a delivery note, should be created in the process. It's like the sheet music your orchestra follows, providing clear instructions to ensure your stock reaches its intended destination accurately and efficiently. Now let's switch gears and talk about how organizations can keep track of these stock transport orders. Monitoring the status of STOs in SAP materials. Management is much like being a detective on the lookout for clues. It requires vigilance, accuracy, and most importantly, a systematic approach. Organizations can utilize the various reporting tools available in SAP MM to keep an eye on their STOs. These tools can provide real-time updates on the status of each order, from the moment it's created to the point it's received at the destination plant. They can highlight any discrepancies or delays, enabling prompt action to rectify the issue. It's like having a bird's-eye view of your entire operation, ensuring everything runs like a well-oiled machine. So whether you're conducting a symphony of stock transfers or playing detective to monitor your STOs, remember that every component, every step, and every detail matters. They all come together to form a harmonious and efficient system of inventory management. As we wrap up, remember that understanding and effectively managing STOs is critical to seamless and efficient inventory management in any organization using SAP MM.